Let's give our audience a little bit of an overview. What would you say is your assessment of where Sri Lanka's capital market stands today?
If you take the overall capital markets, it's sort of like twofold. One is on the debt side, and then you have the equity side. At the moment, what has happened, if you take both fronts, on the debt side, we've seen a significant decline in interest rates. So with that, what we are in is now a low interest rate environment,
Right.
which has a significant benefit for business as a whole. I think it has been booming for a while now, for the last couple of years, and there's a significant interest in the equity market as well. So that's how it stands at the moment.
We are hearing that there's a lot of buying interest from banks and finance companies these days. Can you give us some insight as to why this is and what this means for the rest of the market?
If you take the banking sector, now with the crisis, we saw non-performing loans significantly increase in value. Obviously understandable when the economy is moving into a crisis, a lot of businesses are not doing well. Most of these banks had invested in sovereign bonds.
Right.
So there was a lot of selling pressure and the prices were crashing down. And if you take the finance companies, what has happened was predominantly dependent on the vehicle market. They lend to businesses, it's more related to vehicles.
Right. And now that's booming.
Yes, so what has happened during the crisis was, so they had halted the vehicle import, and those valuations or the company share prices also have declined significantly, and both banks and finance companies were not doing really well. The back-end finance non-performing loans have come down, businesses are doing slightly better, and with it in the economy, private sector credit has started to grow, and together with that, both these banking and finances company sector, in terms of earnings, in terms of business, is doing well, and with that, investors are having significant interest in these companies.
Sri Lanka's economy is recovering. And what does this mean to the capital market? We asked Dimantha Mathew. Stay tuned.
For 30 years, LMD has been the voice of business in Sri Lanka, capturing the pulse of the nation's corporate landscape through its iconic covers. Each cover tells a story, from the first edition in 1994 to the present day, narrating key moments, leaders and trends that have shaped Sri Lanka's business ecosystem. Over the years, LMD covers have featured thought leaders, business pioneers and game-changing innovations, reflecting the evolution of industries and the economy. As we celebrate 30 years, these covers represent more than just publications. They are a testament to LMD's legacy of excellence in business journalism and its unwavering commitment to being Sri Lanka's leading voice of business. LMD, Sri Lanka's voice of business, a legacy of 30 years.
Hello and welcome to LMDtv. The focus today is on the capital market. And I'm here with Dimantha Mathew, the Chief Research and Strategy Officer at First Capital Holdings. Welcome to our show.
Hi.
Let's give our audience a little bit of an overview. What would you say is your assessment of where Sri Lanka's capital market stands today?
Yeah, so to give an overview, if you take the overall capital markets, it's sort of like twofold. One is on the debt side, and then you have the equity side. Debt side is more the government securities, you have the debentures, that side of things, and then you have the equity side of things. So at the moment, what has happened, if you take both fronts, on the debt side, we've seen a significant decline in interest rates. So we saw interest rates going up to 25%, 30% levels in the peak of the crisis. And then now it has gradually come down, and after the debt restructuring, and debt has been brought down to a level where Sri Lanka can afford to. which is currently around the 100% mark in terms of debt to GDP. Now we've seen a significant reduction in interest rates, and we see the government security rates below the 11% mark in terms of the whole yield curve. And then if you take even the things like the debentures and so on, we see they are also around the 11% mark, and FDs also hovering banks around the 8%, 9% mark. So with that, what we are in is now a low interest rate environment,
Right.
which has a significant benefit for business as a whole. And with it, we are seeing companies having lower finance cost, and with it, earnings moving up, business starting to pick up. And with that, uh, the equity market has been booming, and I think it has been booming for a while now, for the last couple of years, and there's a significant interest in the equity market as well. So that's how it stands at the moment.
So it looks good, you would
Yes.
say. Lovely. And talking of, booming interest, we are hearing that there's a lot of buying interest from banks and finance companies these days. Can you give us some insight as to why this is and what this means for the rest of the market?
Yes. So what has happened was, uh, uh, if you take the banking sector now, with the crisis, we saw non-performing loans significantly increase in value. Obviously, understandable when the economy is moving into a crisis. A lot of businesses are not doing well, right? And with it also, we have to understand that most of these banks had invested in sovereign bonds.
Right.
The Sri Lanka sovereign bond, where it had to undergo restructuring. And with it, we saw a significantly low interest in the banking sector. So there was a lot of selling pressure, and the prices were crashing down. And if you take the finance companies, what has happened was, the finance companies are predominantly dependent on the vehicle market. Even if they lend to businesses, it's more related to vehicles.
Right. And now that's booming.
Yes. So what has happened during the crisis was, so they had halted the vehicle import, and those valuations, or the company share prices also have declined significantly, and the both banks and finance companies were not doing really well. But after the restructuring of debt and the economy coming back to a upward trend, and the growth coming into positivity, we are seeing now lending also booming. So you saw the banking sector lending booming. Now with the import restrictions being lifted, you see the finance companies lending also booming at a significant pace. And with it, uh, you're seeing a significant interest by the investors on the banking and finance sector. So that's what has happened. The back end finance and non-performing loans have come down. Businesses are doing slightly better, and with it, in the economy, private sector credit has started to grow. And together with that, both these banking and finances company sector, in terms of earnings, in terms of business, is doing well. And with that, investors are having significant interest in these companies.
And talking of investors, what would you say are the main factors that are driving them right now?
Yeah, if you take investors in terms of capital markets, investors are always looking at return, right? So when the interest rates were high, investors were chasing after yield. So they were looking at what are the highest yielding assets that were there, and that were the government securities, and then it was the fixed deposits and so on. But now that the interest rates have come down significantly, the best alternative liquid product has been the stock market. So you see a significant flow of funds from fixed income to equity. And if you compare to previous cycles, in this cycle also you see a significantly large new set of investors coming into this capital market space. As you know, the capital market space is somewhat limited to a selected set of investors, as partly because of the financial literacy component. So Sri Lanka's, though the literacy levels overall is high, financial literacy levels are pretty low.
Right.
And that's why we are also conducting a lot of program. Even the CSE, even the central bank is conducting a lot of programs to promote the financial literacy levels for them to get an understanding of how the environment is. And with it, we are seeing a larger set of investors starting to get into the market, opening accounts, and so on. So with it, we are having a significant interest in the equity market at the moment, and that's another reason why the equity market is booming. In addition to the companies or the businesses doing a stronger level of profitability, the low interest rate environment is showing signs of higher returns in the equity market. So investors are flocking into the equity market at this moment of time.
And with that inflow and of course more awareness levels, what should they be cautious about in terms of risks that they should look out for?
Yes, if you take the situation right now, you have to understand that we've had a continuous upward trend or a bull run in the stock market, and now the stock market has exceeded the 22,000 levels, which is the all share price index. That's where the main index that is the market is assessed on. So now when you're at all-time high levels and the valuations are picking up, I think it's a level where investors now should be a bit cautious. Valuations are not too cheap,
Right.
and you have to select your stocks if you're staying in the market. So I'm still optimistic about the market, but I would say it's a cautious optimistic level. Two reasons. One, the valuations are climbing and you have to select stocks. And on the other hand, you have to understand the economic situation as well. Yes, we've come somewhat out of a crisis, but it doesn't take a lot for us to go back into the crisis. So it depends on how much of reforms the government is doing and how fast they are doing the reforms. So a wrong move and a couple of months in that direction could bring us back straight away into the place where we were a couple of years ago. Right? So we are not completely out of the hole as yet.
Yeah.
But we are heading, at the moment you could say that we are heading it somewhat of a right direction, but a lot more to do. So investors have to watch out what is happening, how the reforms are taking place, how the IMF is negotiating with the government. Is it going on smoothly? Are the reforms happening on a smoother way and in the right direction? So a lot of things to look out for. But so on that front, you have to be a bit cautious. But I think still there is room for more return in the stock market.
It's time now to take a very short break, but we soon be back to talk more about the capital market.
Display your brand message on digital screens at prime locations. The largest digital advertising network in Sri Lanka. Emerging Media.
Welcome back to the show. We're in conversation with Dimantha Mathew, the Chief Research and Strategy Officer at First Capital Holding. Dimantha, it's been a very interesting conversation and like cautious optimism. There's a lot of awareness, I think, that is also needed by investors. So when we look at this very special sector that's very important to the market right now, what is your advice, if I ask as a final question, what is your advice to investors, both seasoned as well as fresh ones, on how they can navigate this very unique place that we are in right now?
Yes, so capital market is a slightly complex investment product. So you have to be, if you're investing, you have to be on the ball. You have to know what's happening in the environment. You have to know what's happening with the economy and so on, how things are going about. So it's something where investors has to be always taking advice on. So there are so many institutions that provide research on it and guidance on it. So you have to understand, educate yourselves on these investment products, because something that you need to know is, if you invest right, your returns are also higher.
Yeah.
So higher returns comes with higher risk as well. So to mitigate the risk, the best thing to do is to educate yourselves
Right.
and back yourself with advisors. So almost all firms that provide these investment products has their own set of advisors who advise the clients, put out research reports and guide the investors. So if you don't have time to go through all those products, you also have things like unit trusts, where those are funds for retail investors who doesn't have a lot of time to spend to educate themselves. They can put their funds in fixed income unit trusts or equity unit trusts, where there is a specialized fund manager who will be managing their investments.
Right.
So either you do it yourself or you get the support of one of some of these funds. It depends on the investor themselves, how much time that they can spend on this, on educating themselves. So I think the best way forward is to back your investments with knowledge. If you don't have time, get the support of the experts and invest in the right investment product that's suited to you, because you can diversify your risk as well depending on your risk appetite.
Right.
So if you're a low risk person, then there's a separate set of products for that. Then if you want to take a bit of higher risk with knowledge, then you need to go into a certain other set of products. So know what you're doing, educate yourself, and then start investing, because there's a lot of money to be made in this field.
We've been in conversation with Dimantha Mathew, the Chief Research and Strategy Officer at First Capital Holdings. Thank you very much. Loved all the insights and the advice.
Thanks a lot.
And thank you to all our viewers for joining us. Until next time, take care.
Don't forget to subscribe to our YouTube channel and follow us on Facebook, LinkedIn, Instagram, and X. Thank you for watching and stay safe.